Welcome back once again to our deep dive
Yeah.
into Celcius Holdings,
Okay.
the company behind those Celsius energy drinks
Right.
you might have seen in the grocery store.
Yeah, they're pretty popular. I've noticed those.
Absolutely. We've got financial statements, company profiles, analyst forecasts,
Wow.
even some recent buzz about investor activity.
Sounds interesting.
So if you're a fan of their drinks or interested in the beverage industry or just curious about an investment opportunity,
Mm-hmm.
this one's for you.
Definitely. Let's get started with what Celsius Holdings actually does.
Okay.
They describe themselves as a company that develops, markets, and distributes functional energy drinks and liquid supplements.
Okay, so not just your average energy drink then.
Yeah, what makes them functional?
Yeah.
That's a big part of their branding.
Okay.
And probably why they've been so successful. Their flagship drink, Celcius, is marketed as a healthier alternative to traditional energy drinks.
Oh, interesting.
Kind of a drink that combines energy boost with fitness benefits.
Interesting. So they're tapping into that growing health and wellness market.
Right.
Do they mention any specific ingredients or claims?
Yeah, they highlight the use of natural ingredients and a focus on thermogenesis,
Thermogenesis.
the process of heat production in the body, which supposedly helps burn calories.
Okay.
They also emphasize that their drinks are sugar-free and made with no artificial preservatives or flavors.
That's smart. Seems like they're trying to appeal to consumers who are looking for healthier choices,
Mm-hmm.
but still want that energy boost.
Exactly. And they've been successful in reaching a global audience.
Okay.
Not only North America, but Australia, New Zealand, parts of Europe, the Middle East, and the Asia-Pacific region.
Wow, they really are everywhere.
Yeah,
Is their marketing strategy the same across all these different regions?
that's a good question. And unfortunately, our sources don't have that much detail.
Okay.
It would be interesting to see if they adapt their messaging and branding to different cultural contexts.
Yeah.
But we do know that they're using a variety of distribution channels.
Okay, let's unpack that. What kind of distribution strategies are we talking about?
They use direct-to-store delivery distributors, supermarket shelves, convenience stores, you name it.
Wow.
They're even leveraging gyms and e-commerce platforms.
It seems like they're covering all their bases to reach as many consumers as possible.
Yeah, seems like it.
I'm starting to see why I see Celsius everywhere I go.
Right.
Seems like they're ticking a lot of boxes in terms of what consumers are looking for: convenience, health consciousness, that energy boost.
Absolutely. And now that we have an understanding of their business model, let's take a closer look at their financial performance.
Okay.
Their revenue growth has been nothing short of astounding.
Okay.
A 101.65% increase year over year in 2023.
Wow, over 100% growth.
Yeah.
That's huge.
Yeah.
No wonder investors are buzzing about them.
It is impressive, especially when you consider that this impressive growth builds on already strong performance in previous years.
So this isn't just a one-hit wonder situation. They've been consistently growing.
That seems to be the case. However, it's important to note that while their revenue has skyrocketed, their earnings per share, or EPS, took a bit of a dip this year.
Hold on, EPS. Could you break that down for our listeners?
Sure, EPS basically tells you how much profit a company makes for each share of its stock.
Okay.
It's a key metric that investors use to gauge a company's profitability.
Okay, that makes sense.
Yeah.
So even though their revenue is up, their profit per share is down. That seems a little counterintuitive.
It does, and it's something we should definitely explore further. But first, let's talk about another interesting piece of their financial puzzle, their advertising expenses.
Okay, what's the story there?
Well, their advertising expenses have been steadily increasing over the past few years, reaching a whopping $160 million in 2023.
Wow, $160 million. That's a serious marketing budget. They must be running some major campaigns. What kind of impact do you think this massive spending is having on their brand awareness? And could it be connected to that dip in EPS we were just talking about?
It's definitely a key piece of the puzzle. It seems like Celsius is betting big on brand awareness and market penetration, trying to capture as much of that rapidly growing functional energy drink market as possible. And their significant revenue increase suggests that this strategy might be paying off, at least in terms of top-line growth.
So maybe they're playing the long game,
Right.
sacrificing some short-term profitability to establish themselves as a dominant player.
Yeah.
It's a risky move. It could pay off big time if they can maintain this momentum.
Yeah, that's exactly the gamble that many growth companies take, and it looks like investors are buying into their vision.
Speaking of investors, our sources included some pretty interesting news about recent investor activity surrounding Celsius Holdings.
Yeah, there's been a lot of buzz lately.
For example, Bennett Selby Investments LP significantly increased their position in CELH. We're talking a whopping 392.6% increase in the fourth quarter of 2024.
Wow, that's a huge vote of confidence. And they're not the only ones. Other hedge funds, including Signature FLLC and Newbridge Financial Services Group, Inc., have also been adjusting their holdings.
So it's like everyone's suddenly trying to get a piece of the Celsius pie. What do you think is driving this surge in investor interest? Is it purely based on those impressive revenue numbers, or are there other factors at play?
I think it's a combination of factors. The impressive revenue growth is undoubtedly a major driver. Investors are drawn to companies demonstrating strong performance and market share gains. But it's also about the broader market trends we touched upon earlier.
Right.
The demand for healthier beverage alternatives is on the rise, and Celsius is well positioned to capitalize on this trend. They've successfully created a brand image that resonates with health-conscious consumers.
It seems they've really struck a chord with those who want that energy boost without sacrificing their health goals. But let's not forget about the competition. The beverage industry is notoriously fierce. What are some of the challenges and risks Celsius Holdings might face as they continue to grow?
You're right, it's a crowded market. One of their biggest challenges is competition from established giants like Coca-Cola and PepsiCo. These companies have massive resources and distribution networks.
Not to mention the endless stream of new brands constantly popping up, all vying for shelf space and consumer attention.
Exactly. Celsius needs to constantly innovate and differentiate itself to stay ahead of the curve. They also need to be mindful of their dependence on specific product lines. Right now, their flagship Celsius drink is their star performer.
Right. But what happens if consumer preferences shift or a new competitor emerges with a similar product that captures the market's attention?
That's a key risk. Relying too heavily on a single product can make a company vulnerable to market fluctuations. They need to diversify their offerings and continue to innovate to stay relevant. We also have to consider the broader economic context. Inflation, supply chain disruptions, and changing consumer spending habits can all impact a company's bottom line. Celsius needs to be prepared to navigate these potential headwinds.
Okay, so there are definitely some challenges on the horizon, but let's shift gears for a moment and talk about those analyst forecasts. What are the experts predicting for Celsius Holdings' future? Well, from our research, the overall sentiment seems to be quite positive.
Yeah, the majority of analysts are bullish on Celsius Holdings.
Okay.
We're looking at 18 analysts with an average 12-month price target of $49.11. That's a potential 90.57% increase from the current price.
Wow, almost a 100% increase. That's a pretty bold prediction.
It is, and it's not just a few optimistic outliers driving that average. The consensus rating is a strong buy, which indicates a high level of confidence in Celsius Holdings' future prospects.
So are the analysts saying full steam ahead for Celsius?
Well, not so fast. It's important to remember there's always a range of predictions. The high estimate sits at $99, while the low is $26. So while the potential for gains is significant, there's also inherent risk.
That makes sense. It sounds like a classic high-risk, high-reward scenario.
Exactly, and that's where careful consideration and due diligence come in. Investors need to weigh those potential rewards against the risks we've discussed. It's crucial to understand the factors driving these forecasts and form your own informed opinion.
That's some great advice for any potential investors out there. So let's bring it all together. We've covered a lot of ground today, from Celsius Holdings' unique approach to the energy drink market and their impressive financial performance, to the potential risks and challenges they face. What are the key takeaways you'd want our listener to walk away with?
I think the biggest takeaway is that Celsius Holdings is a company operating in a dynamic and rapidly evolving market. They've tapped into a growing consumer demand for healthier alternatives, achieved remarkable growth, and captured the attention of investors. But they also face stiff competition, potential economic headwinds, and the inherent risks of operating in a fast-paced industry.
So the million-dollar question for our listener today is this. Given all this information, would you invest in Celsius Holdings?
It's certainly a compelling opportunity with a lot of factors working in their favor, but it's also a decision that requires careful research and consideration. I'd encourage you to delve deeper into their financials, examine their marketing strategies, and assess their competitive landscape. What factors would you prioritize in your evaluation?
Great advice. As always, do your homework before making any investment decisions. That is all from us, and as always, please help to like and subscribe, as it motivates us to do more content like this.